Good evening and welcome to State of Business on Art Television. I am Tamiru Nimsa. Let's have a look at the headlines. Debt restructuring will conclude by September, President says. Abolishing of the special VAT is concerning, Free Trade Manufacturers Association stresses. News in detail. President Ranil Wickremesinghe said that Sri Lanka is planning to wrap up the debt restructuring process by September of this year. The President said this during the 40th anniversary event of the International Democrat Union Forum with its chairman and former Prime Minister of Canada, Stephen Harper, on the 20th in London.
We have to get the major foreign exchange sources turning again. Firstly is the remittances from abroad, which had come down, which seems to be restoring. More and more money is coming every month. Second is going to be tourism next year, going to be one. The problem is going to be export, especially apparel, since European economy is down and the US is down. Basically, apparel export this quarter is down to about 25%. It's not only Sri Lanka, Bangladesh is also affected. So the prosperity of the Western economy is determined. But I think by end of 2024, we'll be back to normal. The funding agencies will all get in and help us once the debt restructuring is over. I plan to finalize the debt restructuring by September. As I go back, the Parliament will vote on Sri Lanka's debt restructuring strategy once that is on. But what I want to completely liberalize, the structural reforms are being done. Go ahead, immediately liberalize the economy and then ensure that more investments come into Sri Lanka. In the long term, you need investments to shift the balance of trade in your favor. So might as well start that now. But I am confident by 2024 we'll have much better.
President Ranil Wickremesinghe said that the debt restructuring process is a negotiation. Therefore, it should in its essence be interactive. The President expressed this during the Global Finance Pact Summit in Paris, France yesterday.
Sri Lanka had ongoing negotiations with Japan, India and China separately regarding further trade integration and also some of the development programs for the future. This assisted our process, but as far as my experience is, we have to have some improvement for the interaction between the committee and the debtors, because the debt restructuring process is a negotiation and it should by essence be interactive. Looking at dealing with Paris Club and non-Paris Club, we need a new approach because this is basically a geopolitical issue. The mistrust between US and China and the growing tension, it has to be addressed by all, not merely by Sri Lanka or the country concerned. If you do not resolve it, I think we will still, in Asia and Africa, we will get caught into another situation not our making. So these would be the major issues that we have addressed. And restructuring is needed. I agree with it. It has to move fast. Otherwise, most of the countries, whether LIC or MIC, will not have much hope. And there will be more instability, political and economic instability. And without creating a separate process under this round table, we should deal with the issues of the middle income countries, because most are under stress. It's better to deal with them under stress than when they are bankrupt.
The Free Trade Zone Manufacturers Association has expressed concern and disappointment over the government's decision to abolish the special VAT scheme from 1st January next year. The association expressed this in a letter to President Ranil Wickremesinghe recently. It is said that BOI export-oriented companies believe that abolition of SWAT will negatively impact this sector, which is already going through a tough time. Moreover, this decision would not only result in increased administrative costs for all parties and also result in jeopardizing company cash flows. FITSMA said the VAT refund system prior to SWAT scheme had severe fraud in the non-export sector and not among the export companies, as exporters use SWAT refunds against voucher systems for purchase of local inputs. Via its letter, the FITSMA had sought the President's personal intervention to call for a consultation session represented by main trade chambers and associations. It said members of these organizations are directly influencing the export sector in the country and already going through an adverse climate of declining trend in merchandise exports. The FITSMA letter said it is quite crucial to safeguard this viable sector in order to attract much needed foreign exchange to the country. Stay tuned, we will return after this commercial break. Welcome back after the break. State Minister of Foreign Affairs Taraka Balasuriya concluded the third round of bilateral political consultations between Sri Lanka and Poland, with both sides affirming to further advance and consolidate bilateral ties. The bilateral talks were co-chaired by State Secretary of Poland Paweł Jablonski and State Minister Balasuriya in Warsaw last week. The two countries identified avenues for institutional cooperation in the sectors relating to digital, agriculture, fisheries, pharmaceutical, shipping and ports, defense, tourism and cybersecurity. A combination of public, private and government-to-government partnerships was envisaged in advancing result-oriented cooperation in the focused areas. As a new initiative, collaboration between Colombo and Gdansk and Gdynia ports to streamline containerized cargo operations. State Minister Balasuriya and State Secretary Jablonski also exchanged views on regional and international issues of mutual interest. During the visit, State Minister Balasuriya also met with Poland's Secretary of State for Economic Development and Technology, Grzegorz Pichowiak. The main focus was on identifying and maximizing existing synergies with business-to-business contacts. State Minister Balasuriya also met with the Polish airline senior officials to get assurance on direct flights to Sri Lanka for the upcoming winter season. State Minister also met with the Sri Lanka community representatives and discussed their active participation in the economic recovery and reconciliation processes. Lanka Special Steels Limited, which is one of the leading wire manufacturers in Sri Lanka, unveiled its new state-of-the-art manufacturing faculty in the Lanka Industrial Estate. The milestone was celebrated at an event held at the brand new venue in Sapugaskanda recently. The facility is equipped with world-class European machinery in a coup to enhance production capacity and expand its market presence both locally and international. The company aims to increase its production capacity from 15,000 metric tons to 30,000 metric tons per annum. The company has invested 1,200 million rupees for this purpose. Lanka SSL is an ISO certified company which has been at the forefront of the country's galvanized wire segment close to 3 decades. Lanka SSL has obtained the Bureau of Indian Standards certificate, enabling it to supply galvanized steel wire to the significant Indian market.
Today we have inaugurated a brand new state-of-the-art manufacturing facility. Actually, we had an old plant, so we have upgraded our plant to a new capacity with 30,000 metric ton, so which is enable us to take us to the export market and be a serious player. So we are hoping to be a serious player in the export market and capitalize on our brand and with our quality and with the cutting edge technology to the international market, because it's a much needed foreign currency to the country as well as to the company, because today it's very much needed. So we are planning to be a serious player in the export market.
Chairman of Lanka Steel, SDR Arut Pragasam, said that Lanka Steel is capable of competing against any wire that's imported into the country in terms of quality and also cost. The chairman of the company said this delivering the keynote speech at the event.
This plant has a capacity of 30,000 metric tons, which will cater to all the needs of Sri Lanka's galvanized wire and also gives us room to export. Another factor in this plant is that we can run it at between 15 and 20% capacity and yet break even. That is the level of the efficiency of this plant. It will produce a world-class wire, and it will be at a cost where we don't have to ask the government for any protection. Today the buzzword is, you protect us, we'll go into industry. So this is not a project of that nature. We can compete on quality, on cost, with any wire which is imported into the country. So we ask our customers, overseas customers, as well as our local users of our wire, to come and see and inspect this state-of-the-art factory for you, and you will be convinced that you don't need to go anywhere else and import cheap wire and give it to the market.
Stay tuned for the stock update. Trading at Colombo Stock Exchange ended on positive notes today. The All Share Price Index gained 31.56 points to close at 9,339.43, and the S&P SL20 gained 6.55 points to close at 2,673.61. The turnover was 1.1 billion rupees and over 56 million shares were traded. Up next are Forex rates. That's all our news for today. For this and more, subscribe to our channel on YouTube and follow us on Facebook.